one.
I'm not here on Friday, and you guys have to make a new low for the week and a new high for the week. Must have been the big boys leading us higher. Let's talk Boeing, HBQ, Tyson, Monday.com, analyst rating to talk about as well. Tim Quast joins us, and he's got some good stuff to talk about. It's Monday. It's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, welcome traders and investors. We're starting in the red just a tad, nothing major after Friday's rally. Down 8 handles at 44.2250. The buck is just up a couple pennies. Bonds down to the less than half a point, hanging to the 113 handle exactly. Crude up 16 cents at 77.33. That's what your crude chart looks like. Gold in the green by 90 cents at 1938.70. Silver going the opposite way. That's down 14 cents at 22.14. And Bitcoin taking a little breather. That's down $420 at 37,140. Let's bring in Triple D. And before we go to the market stuff, I have a good story and a lot of good things to say about Denver, Colorado. I'm giving Denver, Colorado, downtown Denver, a major upgrade. I was over there for a wedding over the weekend. I loved it. And I know that we have at least one fan in Denver, Colorado, Dennis. Do you know how I know that?
No, tell us the story. How was the weekend anyways? Wedding was good. You're off
Friday.
Good.
We don't need to get into the Michigan stuff, but they won. We won't talk about the Lions. We won't get into the Lions stuff.
We're not a sports show. Oilers even won a game. Look at that.
Oh,
the Oilers hockey, they never win a game.
They fired their coach.
Yeah, no, they won the game on the weekend and fired the coach.
Okay. Once again, digression from digression. Anyways,
sports talk over.
At the wedding that I was at, a young lady came up that was helping out at the wedding, and she said, "Are you Joel from Benzinga's Pre-Market Prep Show?" And there she is, and I'm like,
what's
yeah.
Her name? What's the fan's name?
The fan's name is Monica.
Hi, Monica.
And she gets up every morning at 6 a.m. because it's out there in Denver. She listens to the show. She might listen to Dennis a little too much because she thinks there's a recession coming next year. But it was fun. And then I said, hold on. I go, I got to go get my wife. And she goes, Lisa? And I'm like, oh, man, she does listen to the show. So Shout out to Monica out there in Denver.
Awesome,
I hope
Monica.
Yep, she's learning the market. So we'll bring in Mitch here. And I was following the markets on Friday, and I'm like, what the hell happened? And Mitch explained to me that the big boys took over. The big boys are driving the bus. Huh, Dennis?
Yeah, man. That's how it goes sometimes.
That's it. The big boys. Well, what happened, and it was a very interesting day. So we were weak off the hop. It looked like it was going to be another one of those days where, oh, here we go. We're going to give back, we're going to start giving back the gains from the previous week because we were down on the week. They started coming in with their buying shoes on, but it was selective again, Joel. What we are clearly seeing is tech leading the charge, and not even small stuff. It's mega cap tech that is leading the charge because Kathy did not have a great day. Did not make everything came up towards the end of the day, but it was very much Apple making new moves higher. Microsoft breaking out to a new all-time high. Yes, it's true. Microsoft, new all-time high. Google making a new high on the move. Meta making a new high on the move after their earnings report. Amazon making a new high on the move. Even Netflix showing up and making a new high on the move here as well. Tesla, not quite. They're kind of replacing the Magnificent Seven. I think Netflix is sneaking in and Tesla is sneaking out. NVIDIA as well, making a new high on the move. Yes, I'm still long NVIDIA. clearly see this market is hungry for mega cap tech. I don't know if it's a safety trade, but IWM not participating that much. Like, look at the difference here. You got the SPY, and I know I went on, but I think it's an important tangent to talk about here. The SPY continues, consolidation, making new highs. IWM significantly off of its highs from 5 days ago. We're talking about 3% off. So IWM has not participated whatsoever, and it seems to lead the charge on the downside, and then reluctantly tries to climb when the overall market's going up here. What is the difference? I think you're clearly seeing low debt companies getting bought on dips, high debt companies not getting bought as much on dips, and also getting sold on rips. So this market continues to like companies that have, obviously tech. We've always loved tech, but lower debt companies. And that's because rates are probably staying higher for longer.
Okay. Monica's hopped in the chat this morning to say hi
gosh,
to
she's
us.
here.
Yeah,
Awesome.
she's
Hi,
here.
Monica.
She's up early again, so I want a few tickers out of her today. Dennis, and before we go into all the stuff, did you get caught? Because I'm following the markets on my phone. Sometimes I even leave my phone in the hotel, and all of a sudden I see SPOOs close on the highs, and then we're down 6-7 handles on the Moody's move. Did you get caught on that?
No, actually, I participated in that. So when saw the Moody's started shorting stocks Friday night, I was still at my desk. I usually quit about 5:30 Friday night, but I think it broke. What time did that break, Mitch? It felt like 4:30.
Yeah, like close to 4:30. It was just like
maybe a
just
little bit
bit
after
the close. It wasn't at 4 exactly. It came a little bit
after the close
that.
for sure.
Yeah,
and then they started hitting stocks. So give us the news here, Mitch. What was this news? Moody's. What did they say?
Real quick, can we do a learning moment here? PJ Shannon, because we talk about this all the time, is asking where to find debt on the BZ platform.
Can you show this? Bring up Benzinga Pro, Mitch.
Mitch, you want to drive the bus on this?
Yeah, that doesn't take too long. Just give me 2 seconds here. I'll show you guys.
Mitch gonna grab the screen. We'll show, because I do this exercise all the time. Benzinga Pro has a lot of nice features, obviously there. So you just go, you bring up the Pro.
All right. So the key there, you can just go into their details, right? And then you're gonna look up the company. Where are we
look
gonna
up Apple?
Let's look up Apple. There you go.
It's not going to show you.
So look at the right-hand side here where the company and the industry is, and look at the long-term debt right here. We have it easily stated right there, guys.
So, and you can say, oh my God, what are you talking about, Dennis? They have $95 billion in debt. This is not a low debt company. Well, $95 billion relative is not
to the market cap, right?
When you look at the market cap at $2.899 trillion. And if you look at the cash component as well, Apple has a ton of cash. I mean, and to somebody else's point, they put this debt on the books at a lot cheaper rate. So they're carrying debt because it's worth them to carry it. They don't need the debt, though. Apple does
Where's
not
the cash?
Need the debt.
Cash right here.
Right there.
In the balance sheet.
Billion, you can see right there. Cash.
Oh, man.
And it's even higher than that, I think.
Another would be kind of the debt to equity ratio, right? Things like this is something that you guys can start learning into if you guys want to learn a little bit more about the fundamentals. But this could be something you could be looking into.
Bring up Bank of America just for fun, just to see higher debt companies. And obviously, financials always have high debt. So
you see the current rate. We don't even have that debt to equity ratio. But if you go here into the long-term debt,
they had a problem. I'm going to tell Friday was a problem too. I've got to talk to the pros. So there was a couple companies that were missing it. There it is.
290 billion versus a 219 billion market cap.
Talking like this is the reason. So when you talk about this, and again, this isn't just Bank of America. Financials carry a lot of debt. It's in their business
that's just what
to carry debt. So JP Morgan, which is best of breed, look at the debt: $362 billion in debt. Because they have a lot of money, obviously, that they've got to lend out. So they got to borrow to lend. So, I mean, they're in the business of money. But, bring up for instance, I sold the GNRC, but bring up GNRC. Well, that's not a good example because it's financing play. Bring up you can bring up General Motors and all of them, but then there's financing arm there too.
What about Roadblocks or Unity?
There'll be almost no debt in those.
Yeah.
Again. Unity, well, $2.7 billion, so there's a little bit. It's more of a startup. The startup companies always have a lot of debt too. But bring up Microsoft too.
Carvana.
Yeah, $5.3 billion in
debt. $5 billion versus $3 billion market cap.
Well, yeah.
Yeah, they own vehicles, right?
Deer,
that's
Cat,
expensive.
Intern, bring up Deer and Cat.
Let's do Cat.
24
Cat
billion.
long-term,
So there's a lot of
24.
debt there. I mean, you've got to finance all that, inventory that they're carrying, obviously. So those are issues too. And I mean, when your financing costs are up from 2% to 6, 7, 8%, it's eventually going to hit your bottom line. And it's probably why a lot of those companies haven't participated as much as mega cap tech. So I'm still doing that exercise when I'm jumping into stuff. I want to know, especially if I don't know the company, I want to know how much debt they're carrying, because the companies that are carrying a higher debt load are going to have more trouble in 2024 if rates do indeed stay higher for longer.
All right, like always, you guys can get Benzinga Pro. You get your 2-week trial. You don't even need a credit card. Pro.benzinga.com, of course.
Nice.
Let's get to Moody's Investor Service as they lowered the rating outlook on the United States government to negative from stable. Moody expects that the U.S. fiscal deficits will remain large and significantly weakening debt affordability. Now, of course, another question comes into play as we get closer and closer to November 17th. Will we get a government shutdown this time around? I know I normally poo-poo this headline myself, even because I've seen it come to the tape a million times. But November 17th is not too long from now. They're
Friday.
only expected to get together on the 15th. And are they going to get this done in 2 days? I highly doubt it.
You want to go a lunch
bet? It seems like they have a
bet?
government shutdown.
I'll take the bet.
Okay.
What is it? Go.
I'll take the bet. I'm actually coming to Detroit pretty soon, so I need.
We'll do a lunch bet. We'll do a lunch bet. I think they're gonna pass it. I think that
by the 17th.
Yeah.
Okay. Okay.
Or they do an extension again.
Or do an extension. I mean, we're not shutting down.
The extension.
Likely can't.
We're not shutting down. No, they'll do another
extension
stopgap.
Probably.
Yeah. I highly doubt it, man. I think the Republicans are they're just trying to ruin things and make things look bad for Biden. So at this point, watch out, guys. I think there's going to be some fighting.
There's some fighting, but I think, the way that the Democrats kind of have a little, edge on the vote and everything, just not so much by the pure numbers, but there was some special elections here. So I think it's going to be close, and they'll pass it. That not the full. We're going to have to go through this all again in January. But okay. We got a lunch bet. And I
want to go back just to, the debt conversation here too. Obviously, we got Moody's downgrade a lot of things. Florida asking a fantastic question. So just before we get too far away from what I was talking about,
let's go to it.
Florida, bring it up here, Mitch. Dennis, when does the market price in rate cuts and then take up these high debt companies? And this is a fantastic question, because rates up for longer is not good for these companies. But as we see the TLT rally, we know IWM is showing some life. So QQQ, I can see clearly now. I think that's a song. I can see clearly now that QQQ can rally without the TLT. So
Correct.
Those low debt companies can rally without the TLT. The high debt companies cannot. So the market isn't linked to the TLT. The IWM is linked to the TLT. So those, and obviously a lot of small caps have a lot of higher debt because they're startups, or they're not startups, or the smaller companies that are carrying a lot of debt to continue their operations and finance their operations. So if we can see the TLT and longer term rates start to go higher, your answer is right there. So above 90 on the TLT, IWM starts to look interesting again. So we're in consolidation station, and maybe it's interesting, and seasonality plays in. I think we're going to have a little bit of worries this week because what Money Mitch is talking about with the potential government shutdown looming. That could be, obviously weigh on some stocks. But clearly this market is like tech wins no matter what. Tech wins, if no recession, tech wins if recession. Why is tech win if we have a recession? Because it probably outperforms all these other stocks. So tech probably outperforms. And that's what stocks that I've been looking at on pullbacks too. So on pullbacks, I'm not so much looking, at not Generac or the solar companies or, the high debt plays. I'm looking at, I bought NVIDIA on the pullback because, what? Low debt, high growth, leading. I bought SMCI last week. We talked about that one. Again, tech. I'm looking at tech on pullbacks. Look at Unity. We should talk about that move.
Oh, I saw that.
Unity. But what a reversal. EKS, I believe, had the call and saying that they thought that this could rebound. I was skeptical because I'm in this thing and I'm like vomiting on it. I'm mad at the stock. So you can't think clearly when you're in it and getting killed. But yeah, tech getting bought on pullbacks. And the Unity quarter was not great. They pulled guidance, for crying out loud. But I mean, here's a stock. It's tech. and they're like, well, you know what? We're buying tech on dips, and Unity got bought big time on that dip. I don't know if it continues. I'm still
I
in
want to. I want to
Unity.
just
I didn't
mention.
sell anything.
I want to mention a setup on this because
Yeah.
we talk about. I wasn't here. We talk about the pre-market trading. You never took out the pre-market low, but a lot of things we like to prep you guys for the open because there's a lot of opportunity in the open. Right? That thing opened 22.40. Okay, tick 22.20, and then it absolutely exploded. So if you bought the open, you could have blinked and it was going in your favor. If you didn't buy the open, when it came back, when it went down to that 20 cents, it came back up through the open. You could have attempted a long and then lean on the low. And if you shorted the open, you were basically dead meat because it exploded out of there. So a lot of time, we do the pre-market prep to get you guys ready for the open. There's some lower risk opportunities off the open. It's not always going to work out as perfectly as that, but man, there's opportunity. The algos wait a few minutes, right? Because they're like, oh, they can't lose money. They got to wait for the orders to come in. And that's where someone like, Dennis or someone that has a plan off the opening bell could take advantage of those things. They don't always work out, but we talk about the daily highs and lows of the day. That opening and closing price are just as important.
And TTD Spinner pointing out how to get dip too. I thought about buying this one on the dip.
Oh,
I actually thought about putting in the long-term portfolio on the dip just because it's tech, and it's still dipped. Like, I mean, and I haven't missed it really yet. It was 60 to 64, but I thought about it. I was looking at around 62, and I was like, I can stick a little bit of this in the long-term portfolio, trying to rebuild the portfolio with some tech stocks. Because you know what? When we come out of this next year, it's probably not General Motors leading the way. It's probably tech again. So, I mean, that's the stocks that I want to own for the next bull market, whenever that starts.
All right, I did want to bring in a different conversation, just to bring in a different stock that we normally don't talk about.
Sure.
How's this one? MAGS. This is an ETF on only the Magnificent Seven from Round Hill. So I just wanted to bring in a different conversation, right? Of course, you can see the top holdings here. There's only 7, right? So there's 7 holdings. This is Microsoft, 15%, Amazon, 15%, NVIDIA, Apple, Meta, Alphabet, and Tesla. I also know, I think Matthew Tuttle is opening up one of these also. So I think he's opening up a leverage one of these, but just keep an eye out for
Mitch. I want to point out one thing to here. What do you think my I mean, the chart looks okay.
I'm with you, Joel. I already know what Joel's going to say, and I'm 100%
probably
with you.
Yeah.
Low volume, but that's how these ETFs are. Let's just be honest.
Yeah, they start, but I mean, 22,000. I'm just saying, 22,000 shares in one day. I mean,
I'll tell you one thing though. I'm thinking about investing in something like this because it gives me exposures in the top companies, right?
I think it's a good point by both Mitch here and Joel. I think sometimes when you bring up these low volume ETFs, you got to be careful that you can get in and out of them. Don't trade them pre-market or after hours where there's no market at all. I mean, the market in this thing is 10 points wide right now. Maybe you get a market during the day. I'm not sure. I've never traded this one, but just be careful when you're getting in and out of these things. Like, these aren't really great trading vehicles because the liquidity isn't there to get you in and out and in and out and in and out. I mean, SPY, I trade continuously all day. It's getting out for a penny. I mean, I don't know if it's there. So on some of these smaller ETFs, you just got to be careful. But you can invest in these things. You just got to be, we'll let the price come to you and make sure there's enough liquidity. You don't want to be in these ETFs that trade like 500 shares a day because you can't get out of these things. They're so illiquid. Costs you 3-4% sometimes to get out of some of these. This one here, I think, is probably going to be more liquid than that. So I haven't seen it during the day, but it looks like it's fairly tight traded. So I think you're going to have some liquidity in something like this, but just be careful. So I'm not talking about the Round Hill one here, just talking in general. Be careful trading ETFs, some of these thinner ones, because sometimes you just can't get in and out of them easily.
Yeah, and they did change their ticker symbol just yesterday. On the November 9th day from BIGT to MAGS. So
okay, fun though. It's fun to know more. I like it when you bring up more ETFs because more trading opportunities.
Something that we don't know of.
And I mean, so many people just go SPY, QQQ, IWM, and I mean, those are the 3 big ones. Really, you kind of can encompass everything when you're in those. But there's lots of other ones, like when you want to get sector exposure. Like I said, XLF's your financials, XLV is your healthcare. It depends, what you want. Like oil, I always use XLE or XOP. Those are a little bit different because you got some exploration in the one. But they're right there. XLF, you're just careful because Burke is a big part of that, and Burke isn't really a financial. So, but it is a huge part of it. I think it's the biggest component just because Burke has went up so much. You want retail, your XRT. Those are the thick ones. Those are the big ones. But there are other thick ones too, like RSP. I love trading RSP because it's the equal weight. Now, it doesn't have much of a pre-market after hours, but during the day, if you need to get in and out of something, RSP is very liquid. So if you don't want to own the S&P, but I don't want to own just the heavy Magnificent Seven. Maybe you're of that opinion. It's been an underperformer big time though, because it doesn't heavily weight those stocks. It owns them, but just doesn't heavily weight those stocks.
I got a 4-star for you here in this RSP. Look at this.
Sure.
Last 4 highs are within a nickel of each other. So keep an eye. Yeah, and also it's interesting too because it didn't make a new high for the week like the S&P did, right? Because of the different weighting here. So keep an eye on 141 in RSP. What's the daily volume? Is that good? And Mitch, just going back to your other thing, your
market after hours though, folks.
Yeah, no market. If you want to buy 100 shares of that thing, because you mentioned for your long-term portfolio, then throw your bid out there and you'll get it, eventually. And then, who cares? Your 100 shares, but different. We got to differentiate between the trading vehicle and an investment vehicle. But yeah,
100%.
buy 100 shares in that today.
Hey, we'll see what happens there. Like always, we got to be looking for those investment opportunities. I know myself is looking for them.
I think it's time to look for certain ones, but again, on dips, you always got to be looking for investment opportunities.
Always.
And I've liquidated. The problem is I've liquidated a lot of my portfolio, so I need to rebuild it a little bit here because eventually rates are still going to start going down. And again, I've been picking on a little bit of the bonds, starting to look at stuff like that. Starting to just park, money in, some cash vehicles with longer duration because then it'll act like a bond, like picking up a 5.75% yield for 2 years. Sounds pretty darn good for cash because if those rates start coming down, that's worth something in itself. And I mean, there's traded vehicles too, and those will actually go up. And, people will jump in the TLT. Why are you going to jump in that 3.7%? Well, it's a matter of if rates start actually going down, that capital will appreciate, and the capital appreciation TLT will be significant. So you can get a lot more than 3.7% in your TLT. We're not holding this for eternity. We're holding this for, thinking that rates are eventually going to start going lower. I kind of like the TLT here. I kind of like the setup. I think rates are going to start going lower regardless in 2024 because I do believe economy is going to go into a recession. How much is priced in some of these stocks is a question, but tech doesn't seem to care.
Boeing with the takeoff. The Chinese government is considering revealing a commitment to the 737 jetliner during the APEC summit in San Francisco, which of course will have the U.S. and China presidents are set to meet. This is according to Bloomberg. And Emirates Group is ordering an additional 55 Boeing 777s, the 9S version, and 35 77s of the 8S, bringing the airline's total for 205 units. So that's definitely helping Boeing get a little bit of a lift. But I think a lot of the lift also is the speculation that the Chinese government might kind of commit to that 737 jetliner. That'll be an interesting move. Can Boeing start making the move here?
Exercise for you here, Joel, and I don't know if you can bring up both, but bring up the BA and the TLT for the last 3 months. Bring up those two charts because Boeing is loaded with debt, and we know that. It's how these huge planes you just got to sell. You got to finance this stuff. So if you bring up BA and the TLT, you will not believe the correlation here. It looks to me like it's the identical stocks. Like it looks like Boeing and TLT are identical in every way. I mean, the last 3 months, you can see clearly linked BA and TLT. Joel's trying to. I'm throwing under.
I'm doing it.
He's trying to get them both going, but
I'm gonna help you out on this here.
I'm add symbol. They used to be
you a little bit better
if
here.
You got
so
it.
This line is going to represent the TLT.
But do the last 3 months only, where we really, I know, go for rates because you're expanding out here. I want to expand and look closer. So going the wrong way here, Mitch. So go for the last 3 months.
Just the last 3 months on the daily chart.
Last 3 months.
So this is the last 3 months. There you go. Right here.
Is that the last 3 months there?
That's August, September, October, November. Maybe you want to cut off September. Maybe just go to September, October,
but clearly,
November.
And again, on my charts, I see it very clearly too. It's interesting. BA and TLT, I mean, you've got like,
you see that little bounce here. How it
they're virtually identical. And I mean, this is the same thing. IWM, we bring it up. It's linked with the TLT as well. TLT is checked back. IWM is checked back. So You've got to just understand these relationships. So Boeing today on its own in specific news, getting a lift here. But overall, what is going to drive the bus for Boeing, again, is going to be rates. So we need rates for Boeing to just blast off and go to 220, 230, 250. You need rates to start going down. Apple doesn't need that. Boeing does.
Pre-market high 204.40. So always you got to look for follow through. We're only 50 cents away from that area. So from taking out the pre-market high, para high. If you're looking for more on this, this is a nice move. So I don't know if you bought the 200 calls, on a whim on the weeklies, and you're feeling really good right now. But there is a pair of highs at the 206 area. I'm going to call it right in the middle. So if you get follow through that pre-market high, look for the 205.5, 206 area. If you're thinking of shorting it today off this news, saying, it's going to fill the gap, maybe just be a little bit patient, because look what Disney did, right? Disney, different stock. This was earnings. You got the pop, you got over 90. We didn't say, you got to short it at 90 that day. You just, look at that as a key level. Look at the day that it had on Friday. Got to wait for it to come back into the. I don't know if it's going to come back all the way to fill that gap. Who knows in this market? But there's a tip for you in Boeing. Someone mentioned the airline stocks, and they're trying to come off the bottom.
Same
I don't
charts.
know. Yeah.
Same thing. Same problem rates. So we can say airlines started selling off when oil started going up in the summertime. But when long-term rates started to really tick higher and we started talking about the 10-year at 5%, that's when all these stocks started to correlate together. Those correlations will break down. And eventually, stocks will be stocks and they'll do their own things, trading on their own company specifics. But still, right now, rates are driving the bus here. And you can clearly see, you bring up a chart of Delta, bring a chart of IWM for the last 3 months. Those charts look the same.
Monday.com.
Go ahead.
Monday.com Q3 adjusted EPS 64 cents beats the 20-cent estimate. Sales of 189.19 million beat the 182.36 million estimate. They expect Q4 revenue of 196 million to 198 million versus a 195.16 million estimate, and fiscal year revenues of 723 million and 725 million on the high end versus an estimate here way below at 715.53 million estimates. So Monday, getting the lift on a Monday.
Yeah, we should have known. Monday, you buy my stock on Mondays. I don't follow this company close enough to really tell you, this or that. I mean, there's a lot of tech companies. There's a bigger one here too. I mean, it's not a small company. This is a $6 billion market cap, but I don't typically trade this stock, so I'm just going to limit my comments. I just don't know much about the company.
Pair highs at 155. If you could take out that pre-market high at 155. Actually, they got a 155.40 print in there. I don't know who bought it up there, but pair highs at 155 as you get back up here. I mean, normally, or what we've seen over the last couple of weeks, is when these things kind of start out in the green and they get rolling in the green, that kind of hard to stop it. Today's not the greatest market environment. We're down a little bit, but we're way off the lows of the session. So see if you can get some follow through, take out that pre-market high, keep an eye on the 155 area.
Tyson Food Q4 adjusted EPS of 37 cents beats the 39-cent estimate. They do have Q4 sales here missing at a 13.348 billion, missed the 13.707 billion estimate. They do anticipate total company adjusted operating income of 1 billion to 1.5 billion in fiscal year 24.
This stock has been an epic disaster. Maybe no disaster bigger in the food stocks than Tyson Foods. We're talking about a stock that in 2021 hit new all-time highs over $100. It has been cut in half. And this isn't some, high, beta, like crazy stock. It's chicken. I mean, P's 15, it's reasonable. Chicken. It's chicken. Don't call me chicken. You calling me chicken? Nobody calls me chicken.
Eat more chicken.
What movie is that from, Dennis?
You know where it's from. You better know where that's from. Wait, nobody calls me chicken. Back to the Future. That's Michael.
Okay.
What series?
1, 2, 3, or 4. I mean, there's a lot.
There's 3 of them, but and honestly, I rewatched those with my kids. Those movies are fabulous, just fabulous. Great.
Your kids actually stood and watched that, man.
Those are awesome movies. The
You got
Back
good
to the
kids,
Future
Dennis. You're raising them
trilogy is
well.
just phenomenal. Like the
You're raising
first
them
one
well,
is just
man.
incredible. The concepts, I mean, just incredible movies. I don't even remember. We were talking chicken. Don't call me chicken. It's at like a 7 or 8 year low here. So is it, to a point where the value maybe is there? Yeah. Again, same issue that Boeing has, same issue that airlines have. It's got $8 billion in debt on a $16 billion market cap. So rates are hurting them too. It's not only that maybe people are eating healthier and not as much chicken as they were before. It's that rates are hurting them more than anything. Probably getting squeezed too in margins because you got labor inflation that's happening in a lot of these industries here as well. So I just don't know if it's a place I want to be. I will tell you though, the stock is cheap.
I don't know. There's a lot more unhealthier things you can eat than chicken, but
people are getting away from like there's still this movement away from meat. I'm not one of those people.
I don't think that's gonna happen.
I
Dennis.
like meat.
Dennis,
I'm a meat eater.
Look at Beyond
I eat
Meat,
lots
man.
of chicken.
That's
I
never
help
gonna
Tyson
happen.
Foods every single day. I help my buddy Alex, who's got a chicken farm just down the road here. I love eating chicken. I'm all for pro. I'm with you, Tyson. I love eating chicken, but there's a lot of people that are like, no, don't eat meat. It causes heart disease. Well, everything else causes cancer. So you want which one you want? Heart disease or cancer? You got to die from something.
I'm sorry, I can't pay. I can't afford all that fake meat life. I'll just take my chicken.
You go the real chicken too?
Yeah, I ain't paying no Beyond Meat stuff. You see the prices
meat.
on that?
Where is Beyond Meat? Is it still alive?
I've been
Yeah,
saying this from the
sucks.
start. Fake meat, fake profits, man.
Remember we
be
had Mark
around.
Yusko? Remember Beyond Meat? We had Mark Yusko on the show, and he helped with the underwriting and stuff on this stock, and he was locked up. And he said when the lockup expired, I was selling that stock as fast as I possibly could. That's what he's telling you, just to get out of that, like Mark Yusko. And I'm with you. Lockup expires, get out of that thing with this ridiculous valuation. That was up when the stock was like $120. It's $6 here now. That story is way over. If you're investing in Beyond Meat, you are never getting your money. There's never 100% certainty of anything, but I'm going to say with 99.9% certainty that you are unlikely to ever get your money back in Beyond Meat. If you
does McDonald's still serve that? Does McDonald's still serve?
It came in for a test.
Do you think I'm thinking Beyond Meat on the weekend? You think I'm thinking Beyond Meat on the weekend?
That's Beyond Meat right there.
Come on, baby. Look at those. Come on. You think I'm thinking Beyond Meat? You think those are fake? Nah, come on,
fake.
Man.
You don't need no fake meat,
more
Mitch.
chicken.
You need real meat.
Look at those ribs, baby.
A technical note here. Wow, Dennis, they knocked this thing down to 43.46. 43.46 is where they knocked the Tyson chicken down to.
The stock is cheap.
Yeah,
I'm going to say that, but I'm not coming in because I got to see rates start ticking lower on this. I think it's a rates problem too.
Someone mentioned they bought it at a pre-market because their kids love the nuggets there. I would just longer term here. I'd just keep an eye on 45 because the previous low of the move was 44.94. So if it can make a couple lows the same day, stabilize, get back over 45, maybe you get a little bit of a dead cat bounce. If not, man, the COVID low, if it takes that out, you want to do a reset at the COVID low. COVID low comes in at 42.57. For some reason, Pilgrim's Pride just doesn't get his hit as bad. I don't know if they sell other stuff or if it's in a different region, but if you're looking for a sympathy
chicken
play,
stock, maybe it's a better chicken stock.
Yeah, maybe it has chicken, and I don't know if it's going to be out. Don't they make turkeys too, Tyson? Or not?
Oh man, no! Don't tell me no fake
turkey
for Thanksgiving.
Do you guys want a Thanksgiving holiday turkey cooking tip?
Yes, sure.
Yeah. Give it to us.
Okay, so Butterball has a 24-hour hotline that if you had
24-hour hotline. I'm at 3 a.m.
The information you get on Premarket Prep, guys.
No. The reason is because my sister and her husband went to someone's place for Thanksgiving, and they forgot to take the turkey out of the freezer. And so they woke up.
How do you cook this thing in 2 hours?
Yeah. Well,
they more like give me a free turkey.
And it was a kind of a logical thing. They didn't have to call the hotline. They just said, just keep submersing it in like hot water. and then it eventually thawed. So there's a
it.
tip for
Yeah,
Thanksgiving, which is coming up. Could have a Turkey Day rally coming up.
Nice.
All right, guys, I'm going to sneak one more in here. That's
Tim
not
Quast.
a crazy stock. Verve Therapeutics announced interim data there, and we'll just go run through this. This is therapeutic stock, definitely taking a major hit down. Disaster stock of the day, Verve Therapeutics. And this was interim data that really another stock getting hit here. We've been seeing too many of these stocks continue to hit down.
Verve is not the word today. VERV. Down near the lows, Joel. There's some support in here. I don't know anything about this company. I don't think I've ever even traded here before. And these things that come out and miss trials often continue to leak. But there's some support here under 10.
See, now I did. Bird is the word is a sod too, but remember Mark Fidrich, that was a great
We
pitcher.
went on so many horrible
so many
tangents.
tangents.
I had to say verve is the word. Now all I'm thinking about is like Family Guy and
I don't see it.
Oh yeah.
That really, I'll limit my technical comments on this one because you are taking out the all-time low.
All right, let's go to Tim Quast. Save us, Tim. Let's see what's Market Structure Mondays letting us know about the markets.
The Bushwhacker dance doesn't go with that new beat, so that's why I don't do it anymore. But I like the intro for Tim. There he is.
Hey guys, good to see you.
Where are you? That you're hiding?
Yeah, come on, you're hiding it.
I know where he is.
I see these awesome mountains in the background.
It appears like I'm in some opium den, doesn't it? It looks like it.
You're in the 70s at least, Tim.
You're back in the 70s for sure.
Back to the future. We went back to the
70s.
past.
I love the 70s.
There could be another thing too back there, but Tim, are you still in Texas?
Yeah. I'm at our home.
That's that
away
good
from
old
home.
Texas background.
Yeah, it's the Sheraton in Georgetown, Texas, and so it's actually it's a decent day. But if I open those curtains, then I'm backlit, and it looks like I'm in the witness protection program. So I had to take the lesser of two evils. Anyway, yeah, we're in Texas.
Real quick, Tim, great restaurant recommendations in Denver. I had a really good time. That REI store, I mean, I could have spent like 10 grand in there. That thing is like 250,000 square feet. But anyways, Tim, we got you here. Big rally. Is it possible for us to rally into the year from this elevated level? Can we rally all the way to the end of the year?
Well, I'm sorry I missed you in Denver, Joel. I'm sorry that I wasn't trooping you around to some of our favorite spots there. But next time, I'm glad that.
Okay.
So Rioja is the restaurant that I think you went to for lunch, which is a great Jennifer Jasinski restaurant in Denver, and there's a lot of fine dining in Denver. And that REI store is awesome. So Joel, the it's not how I think about it. I realize that it's all the talk now is, well, can we have that now that the market has appeared to have recovered from a bottom? Do we have this big rally into year end? And I think traders, it's not the way that one should think about it. Dennis, you talked about this last Monday that we think in short term increments and we take what the market gives. And I have two thoughts about this. I'll be surprised if that happens, and I'll tell you why in these two reasons. But I think first about what's coming right ahead of us. So there are options expirations this week from a sentiment standpoint, which is to me a market structure, not technical term. From a market structure perspective, we are at a level that has always preceded declines. I think that these massive short-term rallies create real problems for sustained gains, and it's because so much of the money is pegged to models. So if the whole market declines 10% and it recovers half of that or more in 2 or 3 days, believe it or not, all the models will be out of whack. People will be overweight things, and they'll have to sell it, and we haven't even remotely gotten back to levels where we should be. And that problem arises if the amount of money coming into the market is not greater than the amount of money leaving it. The resets, the gains will be short term and the resets will be lower. And I don't think that we have broken that cycle yet. So Joel, I would not think that way as a trader. I think about, are we long or are we short, and in which things? That's the way I think about it. And to me, the end of the year is a long way off. I'm much more concerned about what's coming this week. Is that a cop-out answer? That's how I feel about it, though.
What do you think is coming this week? I mean, we have a lot of things at the end of the week, to your point, options expiration, but to a bigger point, a potential government shutdown looming over in this market as well. I mean, we know fundamentals do play a part here in markets. We can look at technicals, but there's a lot of other pieces of, to look at as well. What do you think is happening this week, and what's your data showing?
Well, I'll just show you, because this is what I do every time I look at the market. It's going to be, what do the data indicate? What is broad sentiment? I think about broad sentiment, the context, and divergences. Those are the things that shape how I approach it. Doesn't mean it's right, but on the other hand, I'm outperforming the market. These data do consistently work, and I wouldn't talk about them if I didn't think that there was merit to it. So here's what I see, Dennis. I look at broad sentiment, and if you look, I'll zoom this in a little bit. So I always think when we reach the red line, you should be cautious. See back here, September, right into September, option expiration is the green part of the graph. It got to the red line. That's when I shifted short. Actually, right here, I shifted short, right into options expiration.
Tim, can we just stop you for a second, share, because I'm not seeing it on the screen here yet.
Okay.
Here we go. Now we're good. Now we're good.
We have the Sheraton delay at work.
Look at the puns today.
Oh,
we are full of them.
The Sheraton
right off where we were going.
They said Opium Den. That looks like a
Hilton, man.
Like a massage parlor.
delay.
Looks like a massage parlor to me. Not that I've been in one, but anyways.
I love that.
So here's what I was pointing out. Just the green part of the graph. So this is the S&P 500 SPY. It's a proxy for it. And so I'm always watching this. When the green part of the graph is rising, I tend to be long. I pay a lot of attention to the supply side. I realize you can't fully see it here, but the market always declines from these levels. Happened here too. It was actually ahead of it because derivatives played such a role here in October. And now where are we? We are at 6.6, well above the red line. So now if the Sheraton keeps up, I'll scroll down and show you the supply side. So this was the principal reason why the market rose dramatically. We had index futures expire. The banks had to make indexes whole. The market was down 10%. Goldman Sachs has to provide a bunch of stocks to let's call it BlackRock, Vanguard, Fidelity, State Street. And so then they're offsetting that by being short the market. They cover all of that. The market soars. And where are we now? Supply is rising. Demand is peaked. I look at that and say, that's not good into options expirations. Most of the time, that means trouble into expirations. Now, it may not happen, but that to me is what lies immediately ahead for us as traders. And we don't want to give back all these great gains that we've had a chance to build in the last week. So I would begin to think about going short. Not yet, but close to it.
Okay, Tim. Also, we have a CPI on Tuesday and PPI on Wednesday. So we're all rah about the bond rally and everything.
Right.
It's we got to be we got that. Now I love
bond rally has waned here, and that is maybe waiting on that data to see, hey, do we continue the party or not? Sometimes charts wait for data, and I think that's what we're seeing in the TLT here. It's a wait game to see what's the CPI number look like.
Right.
Yep. Getting a little bit too optimistic. Now, Tim, I know we bring in sports to the show and doesn't always get the greatest reception, but and Dennis Jimbo Fisher. This dude, man, I wish I had his agent because he's walking away with about $85 million. He got fired from Texas A&M, and you went to the Texas A&M game, right? Texas A&M, Mississippi State, and they won 51-10. Michigan one too. But he's getting firing. So what does Jimbo Fisher's firing teach us about trading?
Well, the short answer is results matter, right? I mean,
Yes.
the great lesson
True.
out of Jimbo Fisher and for traders is results matter. While we A&M, my wife's an Aggie, and the associate athletic director, he's the head of what's called 12th Man Productions, which is you cannot believe the amount of production, TV, video, social media, everything that's occurring at these D1 schools for recruiting purposes. And A&M has one of the great video production capability. I have 4 major studios. He's got 50 employees, 150 student employees, and so they produce a lot of stuff. So that he's the guy that got us tickets and took us down on the field and all this kind of stuff. But it's funny. We were sitting and talking Friday night at dinner about what he said. If we fire Jimbo Fisher, it costs us $75 million. So we're watching the game. It was a disastrous start. Mississippi State returns the opening kickoff, after all the pyrotechnics and music and 105,000 people in the stands. And Mississippi State returns the opening kickoff for a touchdown. And there were a lot of questionable calls. So by the third quarter, we started passing the hat around the stadium, and we came up with $75 million, and we said, let's fire him. That's really what happened, because there's a lot of money at A&M. You cannot believe the amount of money. But the lesson, I'm joking about a lot of that, and it's a significant issue for a public university to hand out that kind of money. I've long joked that the greatest gig in the world is getting fired from a D1 head coaching job.
I should have been a football coach.
Yeah, and maybe traders, we chose the wrong thing. That we should have all tried to become D1 football coaches so we could get fired and get rich. But really, the serious note is results matter. Discipline matters. And as heralded as he was coming in, he has not delivered the goods.
So here we are. We got for another 2 minutes here, Tim. And I mean, again, this market, it gives mixed signals to a certain extent. A week and a half ago, it looks like we're falling off a cliff, and then we get this violent rally that some people are expecting, but a lot of people it caught off guard here. What do you think now? I mean, and we have the separation too, with the Qs are outperforming. Again, the same story, values underperforming here. Is it more of the same for the next week here or 2 weeks ahead? What are your thoughts?
Well, I think you and I, Dennis, were on very similar pages. I saw a couple of tweets that you put out last week about, trading the ranges, 50% retracement, trade the range. And I think about trading volatility only where the supply and demand are strong. So last week I said, I'm trading big tech. So, the big tech stocks, this is the portfolio. So you go back a week, we had rising demand, insufficient supply. Now demand is peaked and supply is rising. Am I going to continue to pursue that trade? Well, there's still a little day or two of opportunity, but no. And I said I would go, I would go leveraged long the market. And that trade worked too. And the reason was because you back up to last Monday, whatever that day was it the 6th, I think. So you could say, well, demand's rising, supply is falling. I'm going to trade that. Now that has fully run its course. If you looked at momentum, there were like 2 stocks in the momentum portfolio. It got up to 18. Now it's falling.
13.
It's at
what's
13.
in there? What's in there?
So, there are several good stocks in here to me, like Square, PayPal, AppLovin. What's this stock?
Unity made it in there now.
Unity made it in there. And you say, well, how can that be? Well, it's all about supply and demand. It doesn't matter what the news is. It doesn't matter how many reasons something might be bad that you could come up with. Look at the supply and demand. If the supply and demand are diverging, there is a short term, I emphasize those words, opportunity. I trade 1 to 5 days. Most of the time it's 1 to 2 to 3, because statistically in these situations, there's more than a 70% chance of producing 2% or more when these conditions exist. And what I mean by these conditions are a 10 with insufficient supply. You say, well, the trend's up. That's a 30-day trend. I'm going to look at the shorter term, 1 to 5 days. What's the trend? I'll show you an example. I mean, Square is a great example of the kind of supply-demand divergence that Edge is designed to show us. It's, look at this. See how these things are diverging? Strong demand, falling supply. That will almost always produce in 1 to 3 days at least 2%. And you say, well, that's not very interesting. Repeat that over and over, and you're wealthy. It is vastly superior to almost anything else you can do. And so that's why I use that. I look at that's a great example of what you're after with Edge, but realize it's short term. That could change at any moment. The moment this begins to decline and that reverses course, you're out and you move on to something else. And I think the whole broad market could shift short within the next 5 days. I'm not saying it's going to happen. I'm just saying the data have that set up, and the data are almost always right.
We've been on the line.
You're telling me that stock actually was Lee in there and not you. You can tell I'm going blind. There you go. Scroll down. Scroll down.
I was like, yo, where was
Let's see.
The other way?
Which one was it?
Really?
I was like, where was Unity
Oh,
there?
Dennis. Oh,
man, that
man.
looks like a U to me.
Yeah.
Holy.
I'll teach you how to make it full screen there, Dennis. Don't worry.
Oh my gosh. It is LI. No wonder I'm like, I'm trading the wrong stocks. I can't see the tickers.
Yeah, just like you thought Wix was a Chinese stock.
That was just a mistake, but that's just a vision thing there.
Okay.
Well, if you want to keep up with this stuff,
here's a tip for you. Stay young.
That's right. Stay young. That's the best advice we could give.
And maybe get the platform so you can actually see the stock, right? That might help you.
That'll help. That'll help.
You got to get those new prescriptions, I guess.
All right, guys. Like always, Tim Quast, of course, Market Structure Edge. You guys can get your free trial all the way up to a month. And like always, check it out, guys. Give Tim Quast a follow. It's always good to have you, Tim. Be careful out there in Texas.
Will do. Good to see you guys.
All right. Take care, Tim. All right. Let's get back to the market. Joel, how are we looking here?
We're leaking. We tried to get back to unchanged and we couldn't. Now we're just leaking back. I think this is not a huge, really bold call, but I think we see an inside day today. I think if they were going to get this market green, the whole Moody's thing is still kind of hanging over us.
The market in a mood.
Yeah, and so and now in the pre-market low, that 44.0850, I mean, it does have some significance because we had both the high and the low for the week on Friday, folks. That very rare occurrence. You get your daily numbers and your weekly numbers right there together, just below that pre-market low. And so we'll see that. I think even if we take out that pre-market low, I mean, obviously yesterday, Friday's Globex low is way down there at the low of the week at 43.54. And of course, I just think a little inside day, a little jockeying for position ahead of the CPI on Tuesday and the PPI on Wednesday.
All right, let's do a little bit of ticker time. We got a couple minutes left here. You guys throw it up there. I know Joel had caught one earlier that he wanted to touch, so let's get to that one. And that's
Pablo is asking about. I like his persistent Pablo, we should call him. And Vive got hit, and it got hit big time. Goldman Sachs, is maintaining its buy on it. You got to hang in here. I mean, you had the low of the move, recent low, not your June low. So if you're doing a short-term trade, the only thing you can do is lean on that low at 162.72. I'll go a little bit longer term for you. And on the monthlies, there's support in here from like 160 to 163. So if you're looking long-term, you don't necessarily have to take a stab on it today, but multiple monthly lows in the 160 area.
Man, I don't know how you still have a buy on this chart, but hey, shout out to you, I guess. Cisco in the chat mentioned here by Wellbeing Warrior.
Reports earnings on Wednesday, so always hard to do a technical on something ahead of fundamental information. I like to own stocks, though, ahead of the reports. Sometimes you see like a Monday, Tuesday run up into the report. Wednesday night they report, so you could potentially have 3 days. So I don't mind it for a short-term trade. I wouldn't hold it through the earnings here. Dividends attractive at 2.98%. It's value tech. By value tech, we mean, they've got a P's low. It's 13. They do have some debt, but it's basically nothing. We're talking about market cap on Cisco is $213 billion. They only have $6 billion worth of debt. And again, PE 13. So value tech here, it's a company that's, never got back to its highs from 20 years ago, but has grown into that multiple. A little bit head and shouldery on the technicals.
Yeah. I've had this one for a while, and I really wanted to see how it reacted after it did that big acquisition. And I think the street's a little bit thumbs down on it for now because you had the gap down, you tried to recover, and now it's it's making lower highs. So not feeling great about the chart. Longer term here going into the report, but I got a good level for you, even for today or during the number, this 5350 area. You got a whale trying to get out of that area. 4 days in a row last week, it tried to get out there, selling into strength. It didn't work. So until you get above 5350, path of least resistance lower. And on a dip, 5109, it's too close to really try and buy the dip there. Maybe at 50 if you get hit on the report.
Home Depot, somebody
What's
wanted
going on,
multiple
chat?
times.
Nothing. Nobody's
Home
mentioning tickers.
Depot. Yeah, Home Depot was getting asked about earlier. Home Depot reports tomorrow morning. So we do have, in reporting this, we should say this, the big companies reporting this week. Home Depot tomorrow morning. We got Cisco, obviously, Palo Alto Networks on Wednesday as well, Target on Wednesday, TJX, kind of entering retail earnings season. Thursday is Walmart. It's probably the highlight of the week. Applied Materials, Macy's also reports. I don't know if anybody cares about Macy's anymore. WSM Ross Stores. So you're entering retail earnings season here.
I
Let's do
like
a
that
quick
Macy's
technical
mention.
on Home Depot. I mean, the home builders got hit. They've been bouncing a little bit. I'm going to argue Home Depot's moving with the IWM here too.
Home builders getting hit. I haven't seen that too much. They're holding up.
They were getting hit earlier is what we're talking about. So before the recent TLT rally. So what has happened again is TLT started rallying about 7-8 days ago. And that's when all of these higher debt plays, interest rate sensitive plays started showing life. TLT driving the bus there. You can look at Beazer Homes. You can obviously look at Toll Brothers, KB Homes. All these things blasted off about 7-8 days ago. And again, there was a couple of home builder earnings reports in there too, which helped, but also helps that long-term rates started to tick down 7 days ago. I would argue that Home Depot is play off of those.
Macy's heading back down, Florida saying, and there was one chart that I was looking at this morning also with that one KSS pullback here, close to 50% after the recent move here, just to bring those two stocks together there, KSS, Macy's.
TLT needs to start showing us something. Yeah. I mean, CPI matters tomorrow. We need these stocks, again, need rates to go lower. They can't have rates keep continuing up, and Macy's is just in a secular decline. I mean, the stock, everybody talked about the real estate and the PE of 6 when it was 25. I mean, that was the biggest value trap maybe out there. We talked about the automotives being a value trap. There may be no stock that was more of a value trap than Macy's, because that real estate value has obviously dropped substantially as well. The PE on Macy's is now 3. So the PEs of 8, they say, how can you go wrong with PEs 7 or 8? Well, I'll tell you, when the multiple declines down to 3, you go very wrong here. $3 billion market cap only, but they also have $3 billion worth of debt. So, I mean, they just got a pile of debt here. That's in obviously margins getting squeezed. It hasn't been good for a long time for big box, mall-based retailers there besides your, Walmarts and Home Depots. I mean, this mall-based retailers just are not working. And these are the big ones, Macy's, Dillard's, Nordstrom. I mean, those 3 are all cut from the same cloth, and all of them have been terrible.
All right, let's go ahead. Let's wrap up the market here. What is driving the bus today, Dennis? What will you be watching?
Again, if you're trading any of those other stocks, I'll be watching the TLT, which is pulling back here today. But remember, we've now learned that mega cap tech can rally without the TLT. So I think on dips, I think you're still buying. I think you're still buying tech. I think that's what I'm looking at. You get a dip on this, you're using that opportunity, because if we're going to get an end of the year rally, it's going to be tech. And you know what? If we get an end of the year sell-off, tech probably still outperforms. So I think you're still looking at those stocks as safety. I think the safety trade is still on. Hard to come and chase them here. We need a pullback here, so I'm not chasing stocks. But at the same time, a lot of those stocks on my shopping list.
Let's take a look at the final levels from Joel Elconin on the ES. What do you be watching, Joel?
Yeah, for the ES, I mean, that pre-market highs right near the close on Friday. I don't think you're going to get a shot to see that up there. In the pre-market low, even if we take that out at 0850, you have a ways to go underneath that, but I don't think people are going to be whooping up on it. One thing I am concerned about for tomorrow is the market did get a pass off the last CPI and PPI numbers. They weren't great. They weren't great. And I think they were over expectations, but like, oh, we're not worried about it anyways. And the market still rallied. Everyone thinks Powell is so dovish. I do not think that his thing was so, that his speech was so dovish. So I don't know, a little nervous about that CPI print to see if the market gets another pass. Tomorrow, T3 Tuesday, the long-awaited return of Scott Red Dog Redler. He'll be joining us here on Pre-Market Prep, so certainly looking forward to that.
All right, guys, you guys can keep up with Joel Elconin, Dennis Dick at Spoos at Triple D Trader. You guys have a great day. I'll get you guys out of here. And of course, keep up with them on Pre-Market Prep Plus. Now we'll get you guys over to live trading. That's coming up next. And if you're not subscribed, what are you waiting for, guys? Stay informed, stay tuned. And like always, stay safe out there, traders. Let's bring you over to the live trading action. That's coming up next. And like always, guys, don't forget this content is for informational purposes only and not to be used as investment advice, and opinions do not represent those of Benzinga. Hosts and guests may maintain positions in the securities discussed today. We'll see you next time, like always, right here on Pre-Market Prep. Smash the like, and like always, it's time to keep going, guys. Let's see what we can get into the trading action this week.